Bitcoin's upside prospects are supported by at least 3 on-chain and technical metrics, but is the bottom in? Bitcoin, BTC, could be in the process of bottoming after gaining 25% based on several market signals. BTC's price has rallied roughly 25% after dropping to around $17,500 on June 18th. The upside retrace came after a 75% correction when measured from its November 2021 high of $69,000. The recovery seems modest, however, and carries bearish continuation risks due to prevailing macroeconomic headwinds, rate hike, inflation, etc., and the collapse of many high-profile crypto firms such as Three Arrows Capital, Terra, and others. But some widely tracked indicators paint a different scenario, suggesting that Bitcoin's downside prospects from current price levels are minimal. That big oversold bounce. The first sign of Bitcoin's macro bottom comes from its weekly relative strength index, RSI. Notably, BTC's weekly RSI became oversold after dropping below 30 in the week of June 13th. This is the first time the RSI has slipped into the oversold region since December 2018. Interestingly, Bitcoin had ended its bear market rally in the same month and rallied over 340% in the next 6 months to $14,000. In another instance, Bitcoin's weekly RSI dropped toward 30, if not below, in the week beginning March 9, 2020. That also coincided with BTC's price bottoming below $4,000 and thereafter rallying to $69,000 by November 2021, as shown below. Bitcoin price has rebounded similarly since June 18th, opening the door to potentially repeat its history of parabolic rallies after an oversold RSI signal. Bitcoin NUPL jumps above zero. Another sign of a potential Bitcoin macro bottom comes from its net unrealized profit and loss (NUPL) indicator. NUPL is the difference between market cap and realized cap divided by market cap. It is represented as a ratio, wherein a reading above zero means investors are in profit. The higher the number, the more investors are in profit. On July 21st, the Bitcoin NUPL climbed above zero when the price wobbled around $22,000. Historically, such a flip has followed up with major BTC price rallies. The chart below illustrates the same. Mining profitability. The third sign of Bitcoin forming a macro bottom comes from another on-chain indicator called the POEL multiple. The POEL multiple examines mining profitability and its impact on market prices. The indicator does it by measuring a ratio of daily coin issuance, in USD, and the 365-day moving average of daily coin issuance, in USD. A strong POEL multiple reading shows that mining profitability is high compared to the yearly average, suggesting miners would liquidate their Bitcoin treasury to maximize revenue. As a result, a higher POEL multiple is known for coinciding with macro tops. Conversely, a lower POEL multiple reading means the miner's current profitability is below the yearly average. Thus, rigs with break-even or below zero revenue from mining Bitcoin will risk shutting down, giving up market share to more competitive miners. The ousting of weaker miners from the Bitcoin network has historically reduced selling pressure. Interestingly, the POEL multiple reading as of July 25th is in the green box and similar to levels observed during the March 2020 crash, as well as 2018 and 2015 price bottoms.